You own Amazon in some of your strategies. What's your investment thesis for Amazon in the context of disruptive innovation?
Yes, you know it's not in the top 10 for the most part.
Right.
We own it. So those are the 6. And they helped create the world we're in right now. And they've been very successful, enormously successful. And there's been an incredible concentration in the markets to just a few stocks. We actually have a chart of that if you'd like to see it. It's a Goldman Sachs chart. We haven't been more concentrated in the US market since the Great Depression. And that tells me that those, even in the equity space, are fearful and they are demanding a lot of cash on the balance sheet and a lot of cash flow. So very concentrated. But they created the world we're in now. All of the technologies that we're focused on are about disrupting the traditional world order, which they created.
Right.
Okay, so Amazon. Amazon, we've been wondering on the retail side, as we move to agentic AI, where we all have our personal shopping agents, our personal shopping agents are not going to do what we do and default to Amazon right away. They're going to search the world for the best deal, the best selection, the best of everything, the best delivery service, and maybe they're not going to go to Amazon. So we've been thinking about that. And I will say we're reassured in Amazon's latest earnings call. For the first time, it said, we have analyzed our pricing structure, and it is 14% below the average pricing structure out there. So they'll have a good shot. The personal agents or shopping assistants will find the best deal on Amazon, but maybe not. I mean, we do have Temu and Shein, and you know they've been making trouble for Amazon as well. So that's a question for Amazon. What they do have going for them is Amazon Web Services. I think it's more than 60% of their cash flow now, and more than that as a percent of their valuation. And as you'll see in another chart in our big ideas, we think that the share shift in the tech stack is going to be away from web applications. So the tech stack is infrastructure, and that's the cloud, NVIDIA cloud providers, the platform as a service providers like Palantir, GitLab, Palantir being the most important one, and then the application providers, and that's software as a service. Software as a service is one size fits all, and it has been losing share to infrastructure as a service and platform as a service. And we think that's going to continue. We think infrastructure probably won't gain or lose share. Platform will gain a lot of share, and software as a service will lose a lot of share. That doesn't mean that Salesforce.com and ServiceNow won't do fine. They'll probably consolidate the space, as usually happens when there's a dislocation like this. However, we'll see that share shift because enterprises, engineers are going to become so much more productive. I mean, already we're seeing in coding, they're twice as productive, maybe more than that. Just over the last couple of years. And that's only going to get better as we're watching generative AI play out here. So we think that companies are going to want to build more customized software as a service applications, and they'll bring that in-house. So that's the reason. So platform as a service wins, definitely. And we think the biggest player and most important player there is Palantir. Infrastructure needs to support platform, though. And that, of course, is Amazon Web Services. And of course, Amazon is trying to compete against NVIDIA with its chips, Graviton and Inferentia. They may have combined those now. I think they're in the process of combining them. So they'll want to play in that part of the infrastructure stack as well. But we do think that, it was the first web services provider out there. It is it still is the biggest. You've got Azure and Google, giving it a run for its money. So there is a competitive dynamic there. But as long as generative AI continues to make progress in terms of improving performance and productivity, we're going to need those data centers and web services. Long-winded way to answer a question about
great.
Amazon.
Thank you. So the emergence of AI, the public launch of ChatGPT in late 2022 is increasingly being compared to the rise of internet following the launch of Netscape browser in late 1994.
Yes.
It took nearly 5 years for the cycle to reach the dot-com bubble peak in year 2000.
Yes.
By comparison, we are just over 2 years into this new AI-driven cycle. Given this context, I have a few questions. How long do you anticipate this AI theme will remain in a dominant force in equity market?
I think we think it has miles to go. And one of the considerations here is many people thought that the large language models would hit a plateau, basically the performance would flatten out. We'd run out of data, what have you. That is not true at all. In fact, internet data is only scratching the surface of the data out there that's locked up inside of companies. That's why Palantir is such an important company. Locked up in companies around the world, locked up in government structures. They don't even know they have this data going back centuries in the case of some. I think there are some documents at Oxford that go back to the 1600s. And, AI has a lot of training to do, right? And probably much more data than we ever envisioned. We thought, when ChatGPT started, the easy pickings was the internet. It was out there for everyone. But as we're studying data sources, first of all, they are happening every day. Driving is a good example. That happens every day. So the data continues to accumulate, but there's also such a vast array of data out there that I think we've just begun. And it's all technology is happening faster. And in fact, many people think that that artificial general intelligence, AGI, will be here in 26 or 27. I know that Elon Musk has said we're practically there. But the way we're interpreting that is, this is, if we're doing this correctly as human beings, we are going to leverage these technologies into superhuman intelligence and get even more creative. So we'll see. We have a long way to go in terms of data. We know that. And we know the algorithms are getting better. The competition between China and the US is intensifying. I think after DeepSeek R1, many people in the US have renewed respect for Chinese technology. They looked at that algorithm and basically thought, why didn't we think of that first? Now, did DeepSeek train that model for $6 million on a high-end workstation? It probably trained the last leg of development on that high-end workstation. But pre-training, it probably had access to the 50,000 GPU cluster that its parent company had access to. So we don't think that, but we do think it's very interesting that they open sourced. And as we delve into open source in China, it has been around, to my surprise, for at least 10 years. And the reason it started evolving is US software companies stopped selling their software into China because of IP theft. And they didn't want to be subjected to that anymore. Open source changes the game for China, I think. What it does, it's able to distill a lot. Distillation is a term. It basically means lifting from other models, large language models, and making that the base. But everyone's doing that now. And then building more sophisticated algorithms on top of it. So I like it that the US and China are competing. We're both going to be better for it. And it means innovation's going to evolve much more quickly than otherwise would be the case.
Okay. Well, thank you very much for your wisdom, as always. It's
Pleasure.
been very educational. Thank you so much.
As always, Hutch, thank you for doing all of the research that you do on us and for supporting our research and our investment strategies.
Thank you. Please do come back. We'll see you again.
Thank you.
Thank you.
Thank you.